Welcome to the deep dive. When you picture becoming a successful trader, dealing in stocks, crypto, whatever, your mind probably jumps straight to the financials, like sharp analysis, managing risk, timing the market perfectly. We just assume it's all about the numbers. But what if the biggest hurdle, the really expensive and complicated one, wasn't a market crash or some complex trading strategy? What if it was something much more basic, something like, well, language. We dove into some sources looking at the challenges for traders in Africa, and honestly, it changes how you think about barriers to entry in finance. The main idea is pretty stark. The sources suggest that from the moment someone in Africa decides to trade, the deck is significantly stacked against them. Way more, apparently, than for traders who are, as one source put it, Wall Street next door neighbors in the US.
Yeah, and what's really interesting is that this isn't just about the usual economic stuff, like having enough capital or fast internet, although those are obviously factors too. This focuses squarely on the absolute prerequisites, the linguistic foundation you need before you even start. English is, well, it's the global language of finance, no way around it. And if you can't really master the different layers of English required, you genuinely can't begin to understand how markets work or even read the necessary documents.
Oh, okay, so let's break that down then. The sources talk about a kind of triple challenge with English proficiency, like escalating costs just to participate. So the first hurdle is just dealing with all the different versions of English out there globally. And for many traders in Africa, English isn't their first language. It's an additional one. We saw that quote, right? I am PD, so I speak Sapedi. English is my first additional language. So if you're starting from that point as an additional language speaker, you're already putting in a ton of cognitive effort just to operate.
Exactly. And it's not like you get to pick just one version of English to learn. You're immediately forced to juggle essentially two major global standards. There's UK English, which is still dominant in, formal settings, government legal stuff, especially in Commonwealth countries. And then there's US English, which is just inescapable. It's the language of tech, media, and critically, most of the big financial platforms and the fastest news feeds.
Wow, okay. I'm trying to picture the actual mental gymnastics here. It's way more than just remembering color with a U versus without, right? The sources mention differences in
Yeah.
everything: pronunciation, grammar, vocabulary, spelling, punctuation, even idioms,
Yes.
and how you format dates and numbers. That's huge.
That's the core point, really. It's the sheer amount of constant mental switching required. For someone who grew up speaking English, these variations are, mostly minor annoyances you figured out. But if English is an additional language and you maybe haven't fully absorbed all the rules of even one variant, then having to constantly flip between two different rule sets, often in real time, under pressure, that's a massive drain on your mental resources.
Yeah, I can see that.
Think about if you're pausing to double check if a date on a crucial earnings report is day, month, year, like in the UK, or month, day, year, like the US. That's brain power in precious seconds. You're not spending analyzing the actual company data, the cash flow, the important stuff.
Right. It just raises that cognitive barrier massively.
Yeah, exponentially, yeah.
Okay, so that complexity leads straight into the second disadvantage that the sources highlight. This divide between institutional English and, pop culture English. This is where things get practically risky, it seems. South Africa is the example used here, where local English is described as a flexible hybrid form.
And while flexible might sound good for everyday chat, in finance, it's potentially dangerous. You absolutely have to know the difference between the casual English you might use online, maybe influenced by U.S. media, and the very precise, rigid, formal English needed for legal document and official financial reporting. That standard for anything institutional is typically British or UK English. It's the language of regulations, official filings, contracts that need to hold up internationally.
That's why schools there teach British spellings like center or program, right, to lock in that formal standard.
Precisely. But then the fire hose of information traders need daily. The news wires, the chatter on forums like Reddit, the interfaces of most trading platforms.
That's overwhelmingly American, driven by U.S. tech and media.
Exactly right. So if you're learning trading strategies from online gurus or trying to gauge market sentiment on social media, you're swimming in U.S. English slang and terminology. Now, picture a high-pressure moment. You quickly read a U.S.-style news headline about a company restructuring, using American terms, but maybe your broker or the actual legal docs for the company's bonds operate under strict UK financial and legal language.
Oh, wow. Okay, so just to be clear,
Yeah.
You could understand a Wall Street Journal article perfectly fine,
Yep.
but then completely misinterpret a crucial term in a legal trading document drafted in London. What actually happens if you mess that up?
Well, the consequences can be huge and immediate. Misread a key idiom or maybe a subtle difference in the definition of a term in a legal filing because you defaulted to the informal U.S. meaning you see everywhere.
Yeah.
The financial hit could be really significant, devastating even. The sources really stress this. You need flawless dual literacy. Being able to switch accurately is vital for communication to be effective, clear, and legally sound when dealing internationally.
The margin for error sounds incredibly small.
It is. Very thin.
Okay, so hurdle 1 is juggling UK and US English. Hurdle 2 is navigating the formal versus informal divide. Now, after mastering all that, just to process basic info, we hit the third linguistic barrier, mastering financial English itself. The sources are pretty blunt here, saying that knowing general English, even both main variants, is, quote, just the basics.
Right. This is where the specific jargon comes in. And it basically separates the professionals from everyone else. It's like learning a whole new vocabulary set, a specialized code almost.
Can you give us those concrete examples? They really make it clear.
Sure. Think about a simple action. In everyday English, you might say you want to close out your position in a stock.
Okay, yeah, simple enough.
But in financial English, that same action is liquidate.
Liquidate, okay.
Now, close and liquidate aren't really synonyms in normal conversation. Liquidate sounds much more drastic, right?
No.
But in finance, you have to treat them as required equivalents. Liquidate is the professional term. Using close might even mark you as inexperienced. And then you have differences in how regulatory bodies name things. You need to know instantly that if you're looking at a company's results filed for the London Stock Exchange, you'll find a profit and loss account.
Okay, P&L.
Got it. But if that exact same financial information is prepared for the New York Stock Exchange, it must be called an income statement.
Ah, right. So it's not just translating words, it's translating between regulatory dialects based on where the information is filed.
Precisely. You're translating based on geography and regulatory environment.
That really pulls it all together. It sounds like you're basically asking a trader to be a linguistics expert and a financial analyst at the same time. The source material makes this powerful comparison. Trading isn't just a job. It's like learning to speak, read, write, and think in a different language, a foreign language.
And that comparison is so important because it highlights the timing. This whole massive learning process, juggling variants, learning jargon, navigating dialects, it all has to happen before you can realistically start the actual job of trying to make money in the market.
Wow.
The non-negotiable entry fee, paid in immense time and cognitive effort.
That is just a staggering amount of upfront work. So mastering the language is step 1, maybe steps 1, 2, and 3. But what good is perfect fluency if the actual information, the knowledge you need, is hard to find? Let's talk about that final hurdle the sources mentioned, information access. So even if you somehow conquer those 3 linguistic mountains, you still run into this informational barrier. It's described as the challenging process of going through countless of books in search for the truth. That suggests maybe a lack of easily accessible, structured educational resources, like you have to dig for foundational knowledge yourself.
Exactly. In places like London or New York, a lot of foundational trading theory, legal stuff, standard market data is often available through universities, established training firms, maybe even subsidized data services. It's more streamlined. The forces imply that for many potential investors in Africa, getting that essential baseline knowledge isn't straightforward. It often requires this really painstaking individual search.
A personal quest.
A personal quest. And just imagine how much harder that quest is if the best books, the key resources, are written in dense, high-level financial English, maybe using UK terms, while you're still trying to perfectly differentiate UK and US nuances. It compounds the difficulty.
So putting it all together then, this constant juggling of UK versus US English, the need to master specialized financial terms and dialects, and then the added difficulty of just finding reliable foundational knowledge. We arrive at the conclusion drawn by the sources.
And it's a pretty sobering conclusion. They basically argue that this hugely disproportionate amount of prerequisite work just to get to the starting line is the fundamental reason, the systemic barrier. Explaining why, perhaps, we don't see as many large, successful trading firms, hedge funds, mutual funds, or even consistently profitable individual retail investors across many parts of Africa compared to other regions.
Yeah.
The sheer linguistic and informational effort required just to achieve basic market literacy is, well, it's fundamentally unsustainable for most people.
It completely reframes the usual conversation about global finance, doesn't it? It's
Yeah.
not just about having the best algorithm or the sharpest market prediction. It's a field where first you need to be fluent enough to handle two major global English standards simultaneously,
Mhm.
instantly know the difference between a profit and loss account and an income statement,
Right.
and undertake this massive language learning project before you can even seriously start analyzing the market itself.
And that's really the powerful idea we wanted to leave you, the listener, with today. The sources make it crystal clear. Knowing how to read and write English isn't the halfway point on the road to becoming a trader in this context. It's just the beginning.
Mhm.
So what does that tell us about the fundamental structure, the architecture of the global financial system? When its core operating language, English, creates such a deep, multi-layered barrier right at the entrance, well, it means adaptation isn't just helpful. It's this massive, mandatory undertaking. It essentially transforms what should be primarily a financial or commercial challenge into an elite linguistic one just to get in the door. Makes you think, doesn't it?